Joining me now live from Zurich for some analysis is Christian Takushi. He is a fund manager at Swisscanto Asset Management, and his fund holds Sony shares. You must be pretty impressed this morning. It's a good result. Were you surprised?
No, I was not really surprised. I think, although the consensus was kind of negative, we already knew the last couple of weeks people were expecting some kind of positive surprise from the financial side.
And how much of this is due to increased sales and how much is due to cost savings, which can't necessarily be done again?
Yeah, I think the majority is one-off cost savings, followed by improved sales of TVs, and lastly, financial improvements. Most of the improvement is coming from financial side, really.
Now, it does seem quite a long time since Sony launched one of those new iconic products. It does seem like Apple has really taken the lead doing that at the moment. Do they need to do that again in the future in order to have a long-term profitability?
I don't think Sony's problem is about being able to launch iconic or great product hits. I think Sony's problem is one of overall strategy and business model franchise. They're still trying to operate with the same old franchise that were successful in the 80s in a market that is completely commoditized.
So when
That's
you
a
look
problem
at
for Sony.
When you look at Howard Stringer and the kind of job that he's done so far, how do you rate his time at the helm? I
personally rate it relatively, I would say, neutral to negative. I can't be too overly negative because within the framework he's being given, he's trying to do his best. And actually, one of the best things we see at Sony now is, this transformation, restructuring pushed by Mr. Bailey. That's actually bearing some fruit. Sony's spinning off some non-core operations. There is some restructuring going on at Sony, but the overall picture is still the same. A company trying to fight too many battles on too many fronts with very different products, trying to innovate almost every month with something new, but extremely commoditized markets. And Sony's adding some value to consumers in many different ways, but not so much to shareholders, and time is running out for this company. Now,
Nintendo earnings also missed estimates today, another stock that I believe you hold. Is this because the product is just too old? Everybody who wants a Wii has now got one?
No, I don't think so. In a way, you cannot expect. I think Nintendo is doing well, and the results are in line with expectations. The Wii has been a tremendous success. You cannot repeat that every year. The product is mature, but we can see probably some revival in the product when the heartbeat sensitivity device comes on the market. So, Nintendo is preparing the three-dimensional DS product. So, yeah, we are in between. It's like cars, If they don't have new launches in a particular year, results are weak. This is what you see now on Nintendo. Nintendo is in a kind of in-between product cycles. It's a weak spot, but the company is a formidable company, delivering to investors in the long run still good cash flows, very good, solid operating margins, which Sony doesn't show.
Christian Takushi, thank you very much indeed.